Aloha everyone, this is Volkan.civi, your real estate professional. I will be explaining home buying process in 9 steps with details. My goal with this video is to explain. Aloha everyone, this is Volkan.civi, your real estate professional. I will be explaining home buying process in 9 steps with details. My goal with this video is to help you make informed decisions along your journey. If you are planning on obtaining a home and you want to know how, this video will be a great resource for you. Where to start when purchasing a home? First thing first, focus on your finances. If it's a cash-only transaction, you can skip to step 3 right now. If the transaction will be on a loan officer will be the first person you should be talking to. This will help you determine what you can comfortably afford or what you need to be doing to be eligible for a home loan. Loan officer will look at several things. Last 2 years of job and income history to evaluate your income stability. Well, it doesn't have to be the same job. You could be changing jobs. Also, you can get approved with 1 year employment history with a conventional loan if your profile demonstrates positive factors to compensate for a shorter income history. There are also some exceptions. For example, if you're a new graduate, those 2-year job history requirement won't apply to you. That's some good news for new graduates. Assets. Besides your main source of income, you will be showing the proof for your other verifiable income and financial assets, like your cash in the bank, your retirement account, and all other assets. Next thing a loan officer will look at is your debt to income ratio. DTI. What is DTI? DTI is the ratio of your monthly existing debt versus your monthly income. There are different types of DTI requirements depending on loan types. We will talk about loan types in a separate video with more details, but shortly, your debt can be your car loan, your personal loan, if you bought a furniture on payments. All these monthly payments will be added to figure out your debt portion of the ratio. And on the other side, you will have your monthly income. The ratio we have at the end will be your debt to income ratio. It's very important not to add anything on the debt portion of the ratio before you obtain your home. Until you sign the contract to take the possession of your new home on closing day, make sure you make payments on time, keep your credit card balances low, and avoid excessive credit inquiries. Hear this out. If your credit score is 580, you will be eligible for a home loan. Of course, if you have a better credit score, you will get a better interest rate. If you need to better your credit score, you can always see a credit consultant. Step 2. When are we ready to tour homes? Before we start touring homes, you will want to know the purchase price that you qualify for and the corresponding monthly payments that will go along with that price. A loan officer will be able to give you these numbers based on your financial position and the amount you make. After consulting with your loan officer about what your monthly budget will be and what price range is recommended for you, you will be given a pre-approval letter, which will be presented to the seller with the offer. Getting pre-approved may take 1 to 3 days, and without a pre-approval letter, we won't be able to write an offer. You can also use the mortgage calculator on my home search app. Look at the description for the link and download my app. This tool will give you a great idea about what price range is going to be the best for you. While waiting on your pre-approval letter, we can work on your search criteria. Like, what type of home do you want? Single family, townhome, condo? How many bedrooms and bathrooms? Which neighborhoods do you want to live in? And other must-haves like a pool, high ceiling, a huge kitchen island, or a golf course nearby. You tell me what your desires and wants are. Step 3. What should our budget look like when purchasing a home? Now, we will talk about the budgeting items that come along with your home purchase. The first time the money is gonna come out of your account towards your new home will be your earnest money. This is a portion of your overall down payment that gets paid within 3 days after signing the contract and will be held until the closing day. Generally, earnest money will be 1% of the purchase price. In some circumstances, it can go up to 3% of the purchase price, and after depositing the earnest money, escrow process starts. Earnest money is not extra money or fees. It is basically a part of your down payment. Let's say if your total down payment is $10,000 and you already put $2,500 down in escrow as your earnest money, you will simply bring the remaining $7,500 to the closing table. The second time that money is going to come out of your account will be to pay for the home inspection. Home inspection points out existing and potential defects in the house. We will meet the inspector at the property, and the inspector is going to assess every inch of the house: roof, foundation, plumbing, electrical, exterior, interior, windows, doors, and much more. Inspector will generate a full report with pictures and descriptions, and we will be using that report to negotiate repairs. We will talk more about negotiations later in this video, but first we will talk about the final payment you will be making, which is your down payment and closing costs, and it will happen on the closing day when you take the possession of your new property. Step 4. Down payment and closing cost. Down payment. First of all, we will make sure if you're eligible for any closing cost and down payment assistance program. This would be really helpful to bring down your out-of-pocket expenses. Besides that, the most common minimum down payment requirement for first-time home buyers is 3.5% of the purchase price. For example, if we are talking about a $200,000 home with 3.5% down payment, our down payment amount would be $7,000. If we are talking about $200,000 home with 5% down payment, our down payment amount would be $10,000. Now let's talk about closing cost. We will be talking about 4 most common closing cost items besides your down payment. First one, prorated taxes and utilities. Depending on actually when you settle, you will pay back the seller for any taxes and utilities they already paid into the house. Number 2, title insurance. Every home purchase with a mortgage will require title insurance. Title company will handle majority of the paperwork and provide you with a title insurance policy to protect your ownership in the property after the closing day. 3, lender fees. Those are the fees that you pay to the lender to get the loan. And the last one, homeowner's insurance. You will pay a portion of your homeowner's insurance premium upfront at the closing table. All of these can be estimated by your lender when you obtain your pre-approval, so you can have an idea about your closing cost. Closing cost for a buyer can be anywhere between 1% to 5% of the purchase price. It's really hard to give you a certain number because there are many variable items like property taxes or maintenance fee. Those can change your closing cost depending on the property. Let's calculate the cash we will need to close. Let's say we are writing an offer for $200,000 with 3.5% down payment, and we will calculate our closing cost at 2% of the purchase price as an average. So 3.5% and 2% of $200,000. So our down payment will be $7,000 and our closing cost will be $4,000. When we add those two together, it will be $11,000 total cash out of your pocket. However, there is a way to reduce this amount by creatively structuring our offer. We can ask for something called a seller concession, which would reduce your closing cost and make it more affordable. We are going to talk about this in our next step. By the way, you're building up some good knowledge so far. Step 5. Seller concession and reducing your closing cost. What is seller concession? Let's go back to our last example. The total cash investment we need to close was $11,000. Let's say we have only $8,000. So that means we will need to ask for $3,000 seller concession. And that's how it works. If we are writing an offer for $200,000 with $3,000 seller concession, that $3,000 will be applied towards your closing cost. You're not gonna bring down the sales price, but you'll be saving that $3,000 and covering your closing cost. What happens if the seller doesn't want to net less than $200,000? In that case, we will write an offer for $203,000 with $3,000 seller concession, so the seller can net $200,000 and we can also get the $3,000 for our closing cost expenses. So what happens to that $3,000 extra we added on top of the sales price? So that $3,000 will be rolled into your mortgage. Your monthly payments will go slightly higher, but many people can afford slightly higher monthly payments compared to $3,000 upfront closing cost. Plus, you may have furniture to buy or projects to complete. Keeping some of that money in your pocket is very important. Before writing an offer, we will discuss your terms and decide if asking for a seller concession will be right for you. Step 6. The offer. We narrowed down your search criteria, we obtained your mortgage pre-approval, we gone out and toured homes, and boom, we found the one. Now we are ready to negotiate and make it yours. Let's touch on submitting a complete offer to the seller. The first thing and the most important thing is the purchase price. When we are deciding what to offer, one thing that I don't care about, ready for this? Listing price. Here is what I do care about. What other homes in the same area sold in the near future that are similar to that home? Were they bigger? Were they in better condition? Did they have more appealing location? Those are the type of questions we are going to ask before we determine the market value of the property. Once we know how much the home is worth, then we will make a decision if it makes sense to offer below, at, or even above listing price. I know what you are thinking. Above listing price? Yes. In some circumstances, we may have to write above listing price, especially in a hot seller's market. Other things that we are going to talk about when we write an offer: earnest money, closing date, financing terms, and inclusions, exclusions. What are inclusions and exclusions? Let's say you want to keep the patio furniture or certain appliances. We want to make sure to put it on paper, not to worry about it later. We are ready to submit our offer. We are going to attach our pre-approval letter along with our offer and wait for their response. They can either reject, accept, or counter our offer. Once the offer terms are accepted by both parties, paperwork will be drawn, and then real fun begins. Next is the home inspection. Step 7. Option period. Once we got our offer accepted, now we are literally under contract. From being under contract to closing usually takes about 30 days. It can also take longer depending on financing terms and other factors, but let's talk about what happens during that 30 days. Option period begins. Option period usually takes 14 calendar days, and during that time, the buyer has right to hire an inspector to get an assessment of the quality and the condition of the property. After we receive the home inspection report, we will be able to figure out what we want to be fixed and ask the seller to fix those items. We are looking for material defects, not cosmetic upgrades. The seller will decide what they want to fix, if any, and then we will decide if it is satisfactory to us. Here is the great part about the option period. Let's say the seller is unwilling to fix or compensate us for the fixings, and you're feeling uncomfortable to move into the home. Now you can cancel the contract and get your earnest money back. And this has to happen within the option period, so you will be able to get your earnest money back. I'm here as your guide, resource, and friend from start to finish, and I will take you to the finish line. We are almost there. The mortgage companies started their process to approving loan, and the title companies started preparing all the necessary paperwork, and you will be in close communication with the mortgage company if they need any documents from you, so they can efficiently and effectively do the closing for you. And the mortgage company is going to send an appraisal to get an objective opinion for the value of the property. This is another great protection for the buyer. If the appraiser doesn't think that the home is worth what we have offered, then we will have to negotiate to reduce the price of the home. There are 4 possible outcomes for a low appraiser. Seller agrees to take less, seller and buyer agrees to split the difference, buyer agrees to pay the entire difference, or the buyer walks away from the deal. At the end of the day, decision is yours. Seller cannot force you to pay the difference. We will negotiate with the seller to determine the most fair outcome that is agreeable for both parties. What happens if the appraisal is high or comes in at value? In that case, we move along with our deal. Next, closing day. Step 9, closing day. We made it. Owning your own home is a big achievement, and it will be my pleasure to guide you through all the steps from where you stand today to the goal of owning your home. Every person has a different journey. My real estate business has been built on one guiding principle. It's about you. Your needs, your dreams, your concerns, and your life. Your complete satisfaction is my main focus. In fact, I will work so hard to get the job done that you will want to tell your family, friends, and associates about it. I'm looking forward to the opportunity to earn your referrals. Let's get back to the closing day. The day before or the morning of the closing day, we will go to the house for a final walkthrough, just to make sure everything is alright before you sign all the paperwork. At closing, you will be the busy party who is signing. Majority of the paperwork will be the mortgage package, which outlines all the terms about your loan. And you will have a chance to review all these documents before closing day so you can have a better understanding of them ahead of time. Title company will gather the paperwork, the mortgage company will transfer the funds, the seller will be paid, the deed will be transferred, and just like that, you are now a homeowner. This whole process can take anywhere from 20 minutes up to 1 hour, depending on if there are any discrepancies that needed to be taken care of at the closing table. Congratulations! You're a homeowner now. If you have any questions about the process or you're planning on obtaining a new home and needing my assistance, please don't hesitate to contact me. Thank you for watching, and I'll see you next time.